Hi there warriors and welcome back. I'm doing a quick post-session review and also looking at the PM session here, which is ongoing. I have some problem with TradingView right now. Don't know what it is. Okay, this. Okay, so we have here, let's see. The AM session was rough. We took a long that generated a win. We got divergence between indices. We tried to get short on ES, but the computer failed for me, so I couldn't get short, which I thought was a sign from the universe to not get short, but I was wrong. That was a winning trade. I took later on a loss, so one win, one loss, and but ended up green anyway. So that was that. It was a hard session post CPI, and now we have been working around the 8:30 open, and we got a reaction from it at 12:48. Broke these equal lows and this low, and now we traded up into a fair value gap. 1 minute fair value gap and almost up to a 1 hour wick low. If we touch that, that would be more nice for me, but anyway, the wicks tells the bodies tells the story and the wick do the damage. So we see the bodies stays in this lower half of this fair value gap, and the wicks only go up in the premium of that fair value gap. We have here a potential inversion fair value gap for more downside. We do those orange. So if we can get below that and trade up to it, we might get short here to this level. We are also trading at open range gap CE, the midpoint, right now actually. So we'll see how we react here, if we can get some down movement. We're wicking this fair value gap right now. We are at 30, as you can see, yeah, 13:12 here in the PM session. The silver bullet time is 14 to 50, but we can start look at the market anyway. The first percent fair value gap was this small little fair value gap. Drawn out in time, we can see that we had many reactions from it. The body stayed below it. A lot of back and forth. Here we went up to it, here we wicked up to it, and so on. So yeah, I think the market is giving us bearish signs. Let's see daily. The daily is got right now a huge wick on the upside, and yeah, we'll see. The 4 hour I made a swing high here. That's bearish. That doesn't mean the market is turning bearish, but for a retracement down to discount level is absolutely possible. 4 hour fair value gap. Discount. Boom, boom, boom. So my take on it is that the 4 hour will go somewhere here, and this is a tradable range. It's like, yeah, 111 points, so that's more than enough. Right now we might work the middle point of this 4 hour wick. Yeah. And on the 1 hour we have this midpoint MT level of this bearish order block, which we get a reaction from here. So yeah. If we get a closure below this level and a fair value gap here, that's a trade in my mind. Disclaimer for you all, I'm trading demo and you shouldn't follow my trades. I'm just aspirating day trader with the demo account here. So yeah. ES is heavy. Looking for these Wix CE levels. Let's erase some levels. Yeah. Come on, let's twist again. Displacement. Take our other account to demo trade. Don't follow my trades. We can try to ping pong trade this pre-session. We should get the fill there, shouldn't we? A little push here. We should get. Okay, filled in this demo account, and we are looking for lower prices. We have a divergence on the lower side here. Okay. That I saw right now after I put the trade in. So returning here. That was a bad read from me. And that's how it is when you're not inside your kill zones. That's the nice thing, is that this is not our regular account where we trade the silver bullet, where we up 17% in 3 weeks. This is just a play account where I'm up $176,000, where I just have done these kind of trades experimentally. I do the ping pong trading on this account also, but I started a new one, actually, ping pong trading. We are actually at starting balance on that one, and I will do some pre-session ping pong trading during this week, I think. Can be fun. Okay, I have to change over. Yeah, too bad. Let's try go long instead. Reverse position. Stop loss here. Target here. Push it, some. Oh. I might be chopped out of here. All right. This inversion fair value gap is the line in the sand for long. We closed below the midpoint of that. Hope we can push up and create a bullish order block from this 1 minute candle here, the black one. Expansion, thank you. Yeah, you can say this is equal highs, kind of. Yeah, that's nice. Continue push. I need a strong candle here. It would be very nice with the goods. Close just below the opening price. Shouldn't get down under here now. Can secure some profits here. So now we have some what do you call it? Targets. Target 1 with this high, target 2 below this first percent fair value gap, and the final target up here. We are going to be quite offensive with the stop loss here. Now the risk is only $700. is... Come on, wicket. Last line in the sand, midpoint of this bullish order block. If we go out above this this short-term high, I will move my risk to break even, but right now it looks like we'll see how we react here, but I think we should push it now. Push up, push up, push up. $595 in loss. Okay. Yeah, that's it. We'll see how we will approach the PM session. We are at 13:30. Soon we can look for the PM session 1% fair value gap. The first one after 13:30, 1:30 PM. I might be too aggressive with my stop loss here, but yeah, you have to try that too. I'm not working that way on the silver bullet time, but here on my playful account I do that just to get a feel for how tight I can push it and how I can milk the most of the market and save the most of the money. So in this case it might be too tight, but we'll see. Here I should have held it. Okay, 1:30. Looking for the first percent fair value gap on for the PM session here now. Look at that trade. Ah, damn it. I pushed that. That's stop loss, right? We'll see. AM session high, AM session low taken, so why not higher prices in this bullish market? Hey, this is the reason. We have a big CE and we have AM session liquidity taken with some other liquidity here, and now we should push higher to take out the AM session highs and even the all-time highs eventually. I can get engaged again. No problem. I will work the first percent of fair value gap then. First percent of fair value gap trading is that we present the first percent of fair value gap first. Then we trade from it, and we retrace to it, we respect it, and then we go down to 15-second or 30-second chart, and we get the fair value gap and pushed away from it, and we go long from that one. I have that on my X post in the thread that are nailed. You can read about that setup, and you can do it every hour from London down to the PM session. But in short, wait for the first percent fair value gap, wait till we trade through it and up again, and when you have a clear bias like we do now, we are bullish, we wait for it to trade on the 1 minute back to it, and then we go to a 15-second chart and wait for a bullish fair value gap to go long from. Why do I mark this fair value gap out down here and not on the wick? Because here you see it's a gap between those. Then we don't take in consider this wick. We draw it down to the body here instead. So every time you have like this, you take the fair value gap down. Here we have an overlap, so then it's the wick that is the high of the fair value gap. So we would be in a good place here if we didn't move our stop loss. I would probably be break even right now. Here we will see this act as an inversion fair value gap, where we can trade up and down to the midpoint and up down to the high of the inversion fair value gap and then push higher. You see like this one, we pushed into it, respected the midpoint here, then we pushed up and we just barely traded down to the high of it. Here we see if we get support from the midpoint. Taking out this high now into this premium side of the fair value gap. I want us to take us up over it now and close above it. And please, in the comment, subscribe and then tell me how to say above in the correct way, because below, no problem, but above sounds wrong. Above, above, above. See, the 4-hour candle here is now a doji. 24 minutes left on it, so okay. Nice close, but we closed just below the high of it. I want to close above it. You can trade down to the midpoint if it want to. We would be up 1.3 R here. Sorry guys, pushed it too much, but anyhow, it was just a fun trade, pre-market trade. Okay, the first percent fair value gap is this one. So if we want to trade with it, we would like a retrace to it, push up, and on a 15-second we go long inside the fair value gap and then continue. We would have been taking our first partial here, second here, Okay, let's see if we will get what we talked about. Or maybe this. .76 R. Let's see if we can move up here now. Yeah, you can follow me on TradingView, Apexia Trading. We do analysis here too. Let's see how this went. Yay! Took it out. Yeah, the trade I took. Okay, we are now going for, I see some trendline liquidity though, but it goes for that first percent for the gap now. Mm-hmm. Fifteen-second chart. Right, this 4 hour 10 a.m. open right now. So this can be used as support, or it can be used as an inversion level. We'll see. I see the logic would just stop here, so then the bears are winning, right? If we just didn't even pick up some liquidity, we just went down again. Could happen, but why? We took out the AM session lows, some liquidity here, trendline liquidity should be taken. It has been a little bit, but not that much, right? I think we should be eating more here from here. Okay, let's see now. Wick down to it then. 15-second chart. Void here. No divergence. Okay. We might not get it. We'll see. If we don't get this play, we wait for 2 for the PM session silver bullet, okay? So when you do like this, trade both session, it's like working out at the gym, you get reps in. I talk here and I do live analysis. It makes my brain more effective in analysis and everything. Okay, reaction from the upper half of this inversion fair value gap, which is a bullish sign. See if we respect this bullish order book. If we can displace, that could be a long for someone. Oh. Soon in the macro time. 1 minute. We'll see if we get a push up. Be right back. Okay, so that wouldn't be a good trade. Okay, we're inside the macro now. Equal lows. Let's see if we can push the a bit more. Weird that we didn't get any touch of the first percentage here. Well. Yeah, pushed up to 8:30 open. See if we can reach the first percent fair value gap of the AM session. All right, target met. That trade would be a win, but we were stopped out here. Very nice, very nice. The drawn liquidity was right. It's nice to tape read like this. We'll see if we continue up here, closed above this first presented. So 5 minutes to the silver bullet time. I think there are more liquidity on the upside still. Let's see the range here. Okay, so we now have premium and discount range. If this is our target, I need to take trades below the midpoint here. So I will wait for a liquidity grab on a short-term low, and then I will go long on a silver bullet in a bullish fair value gap, if the price gives me to it. But one of my rules is do not go long in premium, and this is premium. Taking out all the targets that we had on our trade. We had that as a final target. Right now we are up 2.7, 2.8 R. I moved my stop loss to the midpoint here and got stopped out with this wick. I should have left it there until we broke this high here, and then I could go with the break-even approach. So my mistake. Okay, 5 seconds to trading time. Now it's silver bullet time. I will not take any trade in this area. I needed to do something like this so I can go long here. Kids. this be the short-term low that I'm looking for? So this might be the silver bullet, but it's not for me because what I told you. I need it to be in discount for me to take it. Okay, shall we look at the bias for the week so long? We have a really nice push up higher. We are bullish because we have done what our pre-week analysis was. We traded down to the midpoint of the last week in discount here. We dropped down during the open gap down, and then we've been pushed up above the weekly high, which was our weekly target. So now just we need to go long as the price give us the opportunity, or a retracement trade down. But yeah, bullishness still is valid. We have a swing low here on the daily, so that's also talking for higher prices. If we close this day green, which it looks like, we have confirmed a bullish order block here on the hourly, which we are trading into right now. So yeah, a nice little liquidity grab on the short term low and push higher would be nice. Otherwise we are done for today. A little wifey kiss. Okay. Tippy, 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 tippy. Keep grinding, but very slow market. Let's check the 15 minutes. Look. Last week was like. Then on Monday we have been pushing higher, so yeah, nice equal lows here, but we stay our bullish bias. But this is hard trading, guys, hard trading. See this, I always, when I see a wick that are salient, I mark it out with the midpoint level, the C level, because we will see how we react when we trade into it and then down, or if we trade down and then up and then down to it again, it can work as an inversion wick. Right now we are moving it, working the inversion style of it. Let's see if we can get a push from it. This close to target, we seldom get a deep retrace, so I think we just spike up here from. If we do like this, I don't anymore think we will continue up. I think we will go down. So my trade ID is now gone because we made some higher short-term highs, lows, and if we break more than 1, 2, 3 PD arrays, I don't believe we will manage to reverse that and go higher. So either we go down now or we spike up. I will leave you with that, and we will touch base tomorrow again at the AM session. Latest, I will probably do a pre-session video, and yeah, hopefully we'll get some trading tomorrow. I thought CPI would give us something today, but it did, but we ended up almost break even. So okay, thank you for watching, and see you tomorrow. Don't forget